Okay, today I'm starting the first in a series of educational videos on what to look for intraday trades. Keep in mind I'm a day trader, rarely hold overnight. So I'm going to start making videos about some of the setups we look for. But I'm just starting with the SPY daily chart here just to say, wow, look at this. You had this big rally here, then a gap up, and then a base, and you just would expect some kind of pullback, and this little candle here was about it. You get another base, and now we're literally through the September highs, and it's actually a little scary to me. You wonder if it can keep up, but for now we just have to respect it and keep looking for intraday setups on the long side. Very impressive. All right, but anyway, first video here, a textbook double bottom, how to use what we call stop runs to your advantage, and I'll show you what I mean by stop runs here. All right, Joy Global is a great example, so that's the one I'm using. This is what it looked like on Friday. I'm making this video January 19th, 2013, by the way. All right, look at this long base, great support in the $68 area, a little bit pushed down here to the $67.75 area, but basically you've got this great support looking at about a 5-day chart here at 68. Okay, so look what happens on Friday. It opens up and sells off straight for 2 hours. I'm sorry, for 1 hour. 15-minute candles, 1 hour down to that area. Okay, pretty steep decline. We also have this purple line, which is the 200 moving average, in this case with 15-minute candles. Look at a lot of charts. You'll see a lot of stocks respect this 15, what we call the 15-200, 15-minute candle, 200 period moving average. Plus we had this 68 support. Great place to look for a possible bounce in Joy Global. Let's switch to 5-minute candles. And you can see right here, look right below 68. You could also call this maybe a wash and rinse, where it takes out the people that had stops right below 68. But you can see the bounce has started here, right? Can it be that easy? Just buy it at 68 and enjoy the bounce. All right, well, the first attempt on charts is rarely the proper entry. And the market rarely makes things easy, for that matter. So where do you think the stops are now? After this bounce, you see the stock start to roll over again. A lot of people might think, okay, the bounce failed, this is a short, but you've got to remember that 5-day chart I just showed you with great support in this $68 area. Okay, so this circle here is a great place to look for a turn back up. As the stops below the recent low, after the bounce started, a lot of stops go in right here, right? That's the obvious place. So this is the place where I'm suggesting to look for a possible bounce. Okay, we call that a stop run. They take out the stops of the people here on this first bounce, and then you get the true bounce. Don't forget that support on the 10-day chart. That's important. This is not just any intraday sell-off that I'm looking for the stop run entry there, but because of that 10-day chart with the great support in this area and the 15-200 that I showed you, that circle is a great place to look for a bounce. All right, look at that. Stops getting taken out right here. You see the green candle. Do you think that's the intraday bottom? Textbook. That's a textbook double bottom stop run, and look at that reversal, and ends up going up over $1 from there. If you just took the first break of a previous 5, you bought as this green candle gets broken, you still could possibly get almost $1 without it ever revisiting your entry. So there you go. There's the first in a video. I'm going to start teaching a lot of the setups we look for. This one couldn't have been a better example. So, all right, enjoy the rest of your weekend. We'll talk to you later.